Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mgm Resorts International Annual Report. Mgm Resorts International offers a diverse range of businesses and services through its subsidiaries. At the core of its operations are casino resorts that provide gaming, hotel accommodations, convention facilities, dining options, entertainment venues, retail spaces, and other resort amenities. The company's gaming operations include slots and table games, as well as live dealer, online sports betting, and iGaming through its BetMGM platform. In addition to its physical casinos, Mgm Resorts International also offers digital services, including online/digital games through its online platforms. This expansion into the digital space allows the company to cater to a broader customer base, including those who prefer to engage in gaming activities remotely. The company's diverse range of businesses and services enables it to attract various types of customers, from premium gaming enthusiasts to leisure travelers, business professionals, and group organizers. The company's operations are divided into 4 segments: Las Vegas Strip Resorts, Regional Operations, MGM China, and MGM Digital. This segmentation allows Mgm Resorts International to tailor its offerings to specific markets and customer needs, while also providing a framework for managing its diverse range of businesses and services. Overall, the company's comprehensive portfolio of businesses and services positions it as a leading player in the gaming and entertainment industry. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause a stock price to drop. The stock price of any publicly traded company can fluctuate due to various market and economic factors. One possible reason for a decline in stock price is poor financial performance, such as decreased revenue or increased expenses. This can be caused by internal issues within the company, such as inefficient management or lack of innovation, or external factors like changes in consumer demand or industry trends. Another factor that can contribute to a drop in stock price is negative news and publicity surrounding the company. This can include scandals, lawsuits, or other controversies that damage the company's reputation and erode investor confidence. Additionally, economic downturns or market volatility can also lead to a decline in stock prices as investors become more cautious and risk-averse. In the case of Mgm Resorts International, it is possible that these factors have contributed to its declining stock price over the past year. However, without access to specific information about the company's financial performance and external circumstances, it is difficult to pinpoint the exact causes of the decline. Mgm Resorts International market capitalization of $10 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Mgm Resorts International holds a significant advantage in their industry. Mgm Resorts International trades at a higher price-to-earnings ratio of 48 times and a higher price-to-book ratio of 3.88 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company exhibits a very high leverage profile, with liabilities accounting for 91% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has aggressively reduced its share count by more than 5%, while revenue, profits, and assets have grown. This represents a very favorable capital allocation strategy, with management materially increasing per share value. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to various factors. Online gaming operations through ventures such as Leo Vegas and BetMGM North America have been significant contributors to revenue growth. The expansion of digital entertainment has also played a crucial role in driving revenue upwards. Additionally, increases in customer advances, loyalty program obligations, casino front money, advance deposits, ticket sales, and unpaid wagers have all contributed to revenue growth. On the other hand, revenue decline can be attributed to several factors. Loss reserves for casino accounts, decreases in outstanding chip liability, rooms revenue, food and beverage revenue, entertainment, retail, and other revenue have all led to a decline in revenue. Net losses on equity investments, derivatives, goodwill, and intangible asset impairments have also contributed to the decline. It is worth noting that some areas of the company's operations do not explicitly state their impact on revenue growth or decline. This lack of clarity can make it challenging to determine the overall effect of these factors on the company's financial performance. The company's net income experienced a significant decline between 2023 and 2025, decreasing by 60% from $1,314,924 in 2023 to $520,872 in 2025. This downward trend continued with a further decrease of 51% from 2024 to 2025. The sharp drop in net income is largely attributed to the decline in profit margins. The operating income margin decreased from 8.6% in 2024 to 5.7% in 2025, while the net income margin dropped from 6.2% in 2024 to 3% in 2025. The primary reasons for this decline include a significant increase in costs, particularly payroll-related expenses, marketing, and gaming taxes. Additionally, the company incurred a goodwill impairment of $278,927 in 2025, which likely contributed to the decrease in net income. The loss on extinguishment of debt and foreign currency transaction losses also had a substantial impact on the company's net income. These factors combined to result in a substantial decline in profit margins, ultimately leading to a significant reduction in net income between 2023 and 2025. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, the net cash provided by operating activities has been consistently increasing over the past 3 years. In 2023, the company generated $2,690,777 in net cash from operating activities, indicating a strong foundation for future growth. The following year, this figure decreased slightly to $2,362,495 in 2024, but still remained positive. However, in 2025, the company saw an increase of $166,883 in net cash provided by operating activities, reaching $2,529,378. This trend suggests that the company is successfully managing its operations and generating sufficient cash to support its growth initiatives. The consistent generation of positive operating cash flow is a key indicator of a company's financial health and stability, providing a solid foundation for future success. The company's debt level has undergone significant fluctuations over the past few years. Initially, it decreased weighted average outstanding debt on page 40. However, this trend was short-lived as the debt level increased significantly from $29 million to $6.3 billion by page 45. Despite a slight decrease in long-term debt from $6,362,098 in 2024 to $6,230,141 in 2025, page 56, total debt investments increased by 45% from 2024 to 2025, page 68. The company's debt level also saw an increase due to the Senior Secured Credit Facility and Yen Credit Facility, page 84. In contrast, interest expenses have generally decreased over time. On page 40, it is mentioned that interest expenses decreased from $446 million in 2024 to $421 million in 2025. This trend is consistent with other pages, such as page 42, which states that interest expenses increased significantly from 2023 to 2024, but then decreased slightly in 2025. Additionally, net repayments of debt, page 44, and interest payments, page 46, suggest a decrease in interest expenses. The financial performance of various segments and regions has been a mixed bag. On the positive side, the U.S. region has consistently shown revenue growth from 2023 to 2025. The high-value segments have also performed well, with engaged customers driving revenue through targeted segmentation and personalized content. In terms of specific business areas, food and beverage revenue increased by $72 million in 2025, while entertainment, retail, and other revenue saw a significant increase of $120 million in the same year. On the other hand, MGM China's EBITDA decreased from $1,087,126 in 2024 to an unspecified value in 2025. The regions of Macau and international markets have been mentioned as performing well, but no specific revenue data is provided. Japan and the UAE International have shown mixed performance, with preliminary construction underway in Japan and potential opportunities for gaming expansion in Dubai. However, domestic operations saw a loss of $237,067 in 2025, while foreign operations reported a profit of $517,846 in the same year. Overall, while some regions and segments have performed well, others have struggled or shown mixed results. A closer look at specific business areas and revenue data is necessary to fully understand the financial performance of these entities. And management is projecting a positive outlook for the company, with a focus on becoming the world's premier gaming entertainment company. Key strategies include driving profitability in integrated resorts, expanding internationally, growing global digital brands, and efficient capital allocation. The company aims to tap into growth areas such as U.S. online sports betting and iGaming through its BetMGM North America venture. Management is also prioritizing operational efficiency through optimization and cost-cutting initiatives, while pursuing strategic growth opportunities such as developing an integrated resort in Japan. The company is investing heavily in its properties, with $1.1 billion in capital expenditures planned for 2025. Additionally, management is monitoring regulatory developments that could impact future financial results. Overall, the company's strategy is centered around driving growth and profitability through a combination of strategic investments, operational efficiency, and cost-cutting initiatives. Management is focused on expanding the company's presence in the gaming industry while navigating potential regulatory challenges. The company has made several strategic acquisitions and divestitures to enhance its business operations and improve financial performance. Acquisitions are a key part of the company's growth strategy, with notable examples including MGM Osaka Corporation, Leo Vegas, BetMGM North America Venture, MGM Grand Paradise, and an integrated resort development in Osaka, Japan. These investments demonstrate the company's commitment to expanding its presence in various markets, including Asia and North America. In addition to these acquisitions, the company has also co-invested in several ventures, such as MGM Osaka and BetMGM North America Venture, which further solidify its position in key markets. Furthermore, the company has made a gaming concession investment in Macau related to capital projects and acquired a 50% ownership interest in MGM Osaka Corporation. On the other hand, the company has also engaged in divestitures as part of its strategy to redeploy capital towards balance sheet improvements, new growth opportunities, and shareholder returns. Notable examples include the monetization of real estate assets and the termination of contractual arrangements with primary gaming promoters in Macau in late 2021. These moves demonstrate the company's ability to adapt to changing market conditions and optimize its operations for long-term success. The company has a history of paying dividends to its shareholders. From February 2017 until February 2023, the company paid regular quarterly dividends. In addition to these payments, the company also reinvested all dividends as required by the SEC. Furthermore, in 2024 and 2025, the company paid various dividends totaling $122 million, $153 million, $51 million, $118 million, and $173 million. In terms of share buybacks, the company has been actively repurchasing its common stock. Between 2017 and 2023, a total of 15,507,340,000 shares were purchased. In recent years, the company has continued to invest in share buybacks, with notable purchases including $2.3 billion in 2023, $1.4 billion in 2024, and $1.2 billion in 2025. Concerns about inventory buildup and supply chain disruption are rising. There are growing concerns about inventory buildup and supply chain disruption. The data suggests a significant increase in inventory levels, with an increase of 15,000 $15,679 in 2025 compared to a decrease of $15,524 in 2023. This trend indicates that companies may be holding onto more stock than necessary, which can lead to wasted resources and reduced efficiency. Furthermore, the risk of supply chain disruptions is also on the rise. Disruptions to the global supply chain can cause difficulties in procuring necessary supplies, leading to delays and increased costs for businesses. These disruptions can have far-reaching consequences, impacting not only companies but also consumers who rely on these goods and services. That concludes the financial summary for MGM Resorts International. Feel free to comment below, and I will be happy to answer them when possible.